Order types. Understanding different types of orders can help you enter and exit trades appropriately. These are critical tools for any type of trader, and combining these with your trading strategy can be highly beneficial in terms of avoiding risks and boosting your performance. Different brokers accept different orders, so you must confirm which kinds of orders you can use. Types of Forex orders. Market order. If you want to buy or sell a currency at the most beneficial price accessible, you will use this order. For instance, if the current bid price for GBP USD is 1.3001 and the ask price is 1.3020, you will be buying this at the price of 1.3020. Limit order. You will place a limit order to buy a currency that is below the market price or to sell a currency that is above the market price. An example of this will be GBP USD is trading at 1.3040, and you want to go long if the price gets to 1.3010. You can either watch the market constantly and use a market buy order, or you can set a buy limit order at that price so that you don't have to constantly watch the market. In doing so, your order will be automatically carried out at the price you set. When it comes to a sell limit order, you will place this order above the current price if you assume that the price will go up in the short term, but you want to take advantage of a bearish trend from that level. Stop order. Stop orders are placed to sell below the market or buy above the market at a certain price. If you think the price is going to move in a single direction, you will then use a stop order. If you want to join an upward price movement, if the price is going higher, you will set a buy stop order above the existing price. If you want to join a likely downward trend, you will set a sell stop order below the existing price.